Hello, and welcome to your Daily 5. I'm Greg Harmon, the founder and president of Dragonfly Capital Management. At Dragonfly Capital, we manage separate accounts for clients and use a technical approach to do so with an options overlay on top of it. For those of you that still want to take control of your own account, we also publish a newsletter that you can purchase with trade ideas that indicate support and resistance, triggers, stop losses, and potential profit targets using both stock and options. Find out more at dragonflycap.com. Today, we're going to take up where we were last time that I came on the show with a macro tour. And that was about a month ago, and we'll see what's changed since then and what we expect to look for going forward. So macro tour, take 2. Today, I want to start with bonds, Treasury bonds. Since the last time we talked, we've had bonds break down out of this descending triangle, and they're now moving back up for a possible retest. All these charts are as of last night's close. And I will tell you that they're all continuing in the same direction today as tensions with the Russia-Ukraine situation continue. So we see bonds have broken to a new low, to a better than 2-year low, almost a 3-year low, and are now going back to retest. Key level will be if we retest this 150, 350-ish level. And reverse back lower, which would be a textbook breakout, retest, and new low. We would expect then that the long-term trend in bonds prices heading lower will continue. If we do break above this, and it has to be significant, so say over 155, then perhaps this was a false breakdown and bonds hold in tight. That would, to me, be an indication that the bond market is saying that things are not as bad as what the Fed expects in terms of requiring interest rate hikes into the future. So those are the 2 things to look for here, a retest here and then see which way it goes. This has probably also got something to do with, the bounce has got something to do with the tensions in Russia. Crude oil has just been rocketing higher since we last talked. It was right in here when we talked. It was breaking out, came back to retest as well, and has now moved up to new 7-year highs here, over $95. We're seeing this week a bit of a pullback in crude, though, although it's barely been back to the 20-day moving average. So with the RSI being into overbought territory and the MACD down here being at extreme levels, this is just allowing crude oil to reset momentum a little bit lower. So maybe we get to a MACD back down here around 2. But if it keeps going, if we get back down below 88 closing price on crude, then maybe we get a full retest back at this breakout level around 85. And then we have that same situation as in bonds to see, does it bounce at 85 and continue on higher, or does it continue lower? Meaning that the uptrend is over. So those are the keys we're looking for in oil. Gold is also breaking to the upside. When we sat down last time, we were right in this area, and it was just about to break out and had failed and came back to this confluence of simple moving averages. But since then, we've seen a new break to the upside, a higher high above the November 2021 high, and over $1,900. Next target, of course, is 1915, this high here, and then we've got 1940 back here from the beginning of 2021. You do see, maybe squint your eyes a little bit, you do see a little bit of a kind of a rounding out going on here from a bottoming effort to rounding a bit higher. Momentum is supporting that. And those of you that feel that gold is a flight to quality or a flight to safety kind of trade, perhaps it's getting some backing from the Russia-Ukraine situation as well. So look for 1915 next and then 1940. And above 1915, you're pretty solidly in an uptrend. Next, I want to show you is the Nasdaq. And the Nasdaq, when we were talking about a month ago, was right in this area. So flirting with a breakdown after it had a failed attempt at a breakdown, and now significantly below its 200 period moving average. Today, it's pulling back down and it's threatening to make a new low below 14,000 again. We have seen this happen before. Back in 2016, we had this, W kind of recovery happen. Perhaps that happens again today. I think guilty until proven innocent thus far, though, that we have to take a look for a retest back at the 2021 lows or the support area here at the 200% extension of the retracement of the pandemic trap. But I want you to also note that here we are in a market environment where there are geopolitical tensions going on, as well as inflation discussion, and to the extent at which the Fed may need to address inflation, and are they ahead or behind the curve? And we've got the Nasdaq falling back, all stocks falling back, and gold rising. With that backdrop, we're starting to get some indication as to how the market is interpreting the crypto market. And the crypto market had, through late 2021, been perceived as being a store of value. That as inflation fears were starting to pick up, that we started to see Bitcoin and other cryptocurrencies start to rise. Now that that is still the case, but we've added in geopolitical issues, we're starting to see cryptocurrencies, and Bitcoin in particular here, instead of breaking this inverse head and shoulders and rocketing higher, failing and falling back. This is continuing today. So it's starting to look more like a tech stock project than a store of value in terms of how investors are valuing it. So we're looking now, if this continues here through the weekend, looking for a pullback to the 38,000 level, perhaps. And the bonus slide today, Ethereum, showing you that it's not just Bitcoin, because in my view, Bitcoin and Ethereum are very decoupled from each other. There's different forces behind them, with Bitcoin being more of an institutional coin, and Ethereum being more of a project-based coin. But Ethereum is going through that same thing, where we had the growth late in the year as inflation fears were picking up, but then the sell-off with the tech stocks and with the increased geopolitical forces, additional selling today. So short-term, 2,830 is a key level here. And should we get below that, 2,700 as the next level, which would also get us back down below the September lows. If that's the case, getting below that, 2,400 is the next stop. That's my daily 5. Thanks for watching.
Hey, Grayson Rhodes here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.